All right, good morning. Thank you guys so much for tuning into today's video. Sorry for the late arrival, but yeah, here I am today, or here I am now at least. Yeah, but coming into today, I have a pretty coming into this morning, I have a neutral bias, right? Our daily objective here. So this is the daily candle that was created yesterday, and based on that daily candle here, I was anticipating for prices to take out previous day high, and previous day high being this mark right here. And so coming into, I believe it was like the London, or not the London session, but the Asian session, we immediately took out yesterday's high of day, and afterwards we ended up starting to retrace back inside this range. There are two things that I do want to mention, is that we are retracing back into the premium of this dealing range right here, more specifically the 12-hour dealing range. Excuse me. So technically we are in premium. We did trade up into premium. And the second thing that I do want to mention is that we are rebalancing this weekly inefficiency right here. So this weekly SIBI right here, we did trade up into, and yeah, if we do close bearishly here, I could anticipate we could do we could have that bearish daily reaction to this weekly SIBI. Just I would give it some time. I would give it today, actually, the entirety of today, to see where and what we're going to do. But yeah, so that's the two things that I do want to mention, that if we do end up starting to see lower prices, that could be the reason, right? We retraced back into the premium, and we also, like I said, we also traded back into that weekly inefficiency. So let's take a look at the 5-week time frame. So this is a 5-week time frame, right? So every one of these candles, or it took 5 weeks to create these weekly to create these candles. And so this 5-week candle here, right, just simply based on how it was created, it's easy to assume, right? I guess it's right to assume that we could possibly take out the 5-week low. That's kind of my draw of, I kind of want to see lower prices here coming into the next 5 weeks. So this 5-week candle here closes it within about 22 days or so, right? And within the next 22 days, I want to see us take out the 5-week low. However, going into this week, right, let's take a look at how we created the weekly candle this week. So this was the previous weekly candle. And notice how the way that it closed, it's not bearish nor is it bullish. It's not really aligned with the 5-week time frame, which is bearish, or which is a bearish order flow, right? So I can't really force anything to happen. And so right now, like I said, I'm pretty nimble. If you guys watched yesterday's live stream, you guys would have seen there was a trade that I took, and I'm actually going to recap that trade pretty soon. I just want to break down what I do have coming into today. Yeah, so that's kind of where I'm at right now. That's kind of what I want to see is, because we completed the daily objective already, I can't really force anything coming into today. It's just I'm going to use, the 4-hour time frame. I'm going to use the 6-hour time frame. I'm going to use the 8-hour time frame, and I'm going to use the 10-hour time frame. I can't use the weekly. The weekly objective has already been taken. So here you guys can notice, you guys can see previous week's high has been taken. I was neutral this week. I didn't care if we're going to take out previous week's high or previous week's low. Turns out we ended up taking out previous week's high. So now the weekly objective has been completed. So what's going to be left for me, right? Well, the last thing I guess that I do want to take a look at or look for is the intraday time frames. I can't use the weekly time frame. I can't use the daily time frame. Daily objective, like I stated before, has already been completed coming into this morning. So what's left? Like I said, 4-hour, 6-hour, 8-hour, and 10-hour. Well, coming into this morning, actually, notice how we closed here on this 4-hour candle and this 8-hour candle. Both of those time frames are bearish, right? It's a bear, like objectively looking at it, it's a bearish 4-hour candle and a bearish 8-hour candle. You can anticipate the next 4 hours to take out, the 4-hour low. But if you guys zoom into the 15-minute time frame, you guys will notice that the 15-minute low here is the same low as the 4-hour low / 8-hour low. That could mean that we should complete the 8-hour objective, which is the 8-hour low, within the next 15 minutes. Because the 15 minutes has the same low as the 8-hour low. This idea is just called, it's called scope. It allows you to kind of get a better understanding of when prices is going to complete an objective. It looks like we just took up previous day low too, while I was explaining to you guys that. Yeah, so we did end up taking up previous day low. And actually coming into this morning, I wanted to see us retrace back into the discount of this dealing range here. Right? It's I guess you can say it's a 4-hour dealing range, 8-hour dealing range, whatever you guys want to say it. And within this dealing range, there's the discount, there's premium, and prices are always going to want to be selling it in premium and buying in discount, right? And with the way that we closed here on the 4-hour and the 8-hour time frame, both time frames are suggesting lower prices. So going from a 12-hour dealing range onto the 4-hour / 8-hour, you can kind of piece it together where the understanding is that we are going to retrace into the discount of the dealing range within this next 4 hours in the next 8 hours, right? The 8-hour candle, 4-hour candle is already suggesting that we're going to take out the 4-hour / 8-hour low, and the after taking out the 4-hour low and the 8-hour low, we should expand lower towards this discount of this dealing range here. So that could have been a trade opportunity. There you guys go. So it's just I didn't take this. It's just with the way that this 2-hour or 2-minute fair value gap and this 3-hour fair value gap was created. It was, not entirely too sure what should have happened, but yeah, I mean, we ended up we traded into the 2-minute fair value gap. We respected it, and then we started to continue lower. We took out the 15-minute low here / 8-hour low, and then yeah, we started to expand lower towards that discount of the dealing range, like I showed you guys. But yeah, that's going to be pretty much all that I have for my analysis for this morning and today. Like I'm gonna state it again. I don't have a daily objective coming into today. I don't have a weekly objective anymore. The only time frames that I could use for a daily bias is the 4-hour time frame, the 6-hour time frame, the 8-hour time frame, and the 10-hour time frame. Those time frames will be my core time frames for now. I can't really force anything. And yeah, so I'm gonna go into the recap of yesterday's trade here with you guys. And if you guys were watching yesterday's live stream, I was still present in that trade. I was still present in that trade during the live stream. So, all right, so let's break it down here. Where is the replay button? So, oh my gosh, my nose is like super runny. All right, so I'm actually going to turn this into a YouTube video, so don't mind the YouTube intro here, okay? Wait, let me pull up the trading journal just so that I know. Just so that I can know everything that I do want to mention. Alright, thank you guys so much for tuning into today's video. Today is March 26th, 2025, and I'm going to be recapping a trade that I took yesterday on NASDAQ. It was a daily model, bullish, and yeah, let's just get right into the technicals just so you guys can see my insight on it and how I approached the trade. Alright, so this is the chart that was present March 25th, right? This is what I was kind of looking at whenever I saw, the trade, right? So I'm going to draw your attention to this 12-hour time frame. And in this 12-hour time frame, we have a swing low, so the very, very lowest low here, and we have a swing high, right? And within a swing high and a swing low, we can create a dealing range. And in that dealing range, there are components. There are three main components that I want to draw your attention towards. So the first one is equilibrium. So essentially, equilibrium is the halfway point of that dealing range. And it separates two major, areas of a dealing range. One being discount and the other being premium. Premium is right here, the red shaded box. And how I want to explain I guess, discount and premium is, think of it like a normal, a normal store. If you guys walk into a normal store, regular grocery store, and you guys see prices at a discounted level, right? Like you see let's just say you're looking for watermelons, and normally watermelons are $5. I don't know how much watermelons are, but let's just say $5 per watermelon, right? But whenever you walk into that store one day, the watermelons are at $2 per watermelon, right? That would be considered a discounted watermelon, and you're more inclined to buy that watermelon because it's at a discount price, and vice versa for selling, right? Sellers, they're going to want to maximize their profits, so they're wanting to sell prices at the most optimal, the most high price that they could, right? Because their returns would be higher if their prices are high. And so that's kind of the idea of premium and discount here, right? And so the idea for this trade, the higher time frame objective for this trade, is that prices should trade into the premium of this dealing range to have a better sell order. And what made me more confident that we're going to trade into this premium of this dealing range is how we closed here on the daily candle. So this candle right here is the daily candle for Monday, right? And based on how we close here on this daily candle, the easiest assumption that you could make is that you want to see prices take out previous day high, right? It's an up close daily candle, and it's, the easiest assumption is that previous day high is going to be taken. And so you're anticipating, or I guess what I was anticipating for Tuesday's price action was that we should manipulate lower into some sort of fair value gap here, and we should expand towards previous day high, because like I said, notice how that daily candle is up close, it's bullish. Just objectively looking at it, you can anticipate that previous day high will be taken. And so we should manipulate lower into a fair value gap, take out the daily high, and then expand higher towards the premium of the dealing range. And so that is the higher time frame objective. That's the model that's how I align myself with this order flow, right? The higher time frame objective was for us to retrace back into the premium of the dealing range. The model suggests that we should go long already, right? It suggests that we're going to continue higher, and the higher time frame objective essentially is like a magnet, right? We should take out previous day high, but the magnet is still working. It still wants to draw prices towards the premium of the dealing range. And so with the higher time frame objective, with the model, now all I need left is a entry pattern. One thing that I do want to mention here is notice how I'm going from, this dealing range here on the 12-hour time frame onto the daily, and from the daily I'm going onto like the 4-hour, I'm going onto the 6-hour, I'm going to the 8-hour, or I'm going to go onto the 10-hour for an entry pattern, right? I'm not going from the daily straight onto the 1-minute time frame. There's no correlation there. And this whole concept is time frame alignment, right? I can get more into depth about what this, I guess, ideal is, but just know that you want to go from a time frame that's respective to that specific time frame, right? So daily, you want to go on to maybe the 4-hour, if your model is based off of the 15-minute time frame, then your entry pattern could be on the 1-minute time frame or the 5-minute time frame. But you don't want to go from a weekly model straight onto the 1-minute time frame. The analogy that I like to use is that imagine reading a book, or like whenever you read a book, right? You always read from page 1, page 2, page 3, page 4, straight to like accordingly. You don't ever read a book from page 1, you skip all the way down to page 50 and then you continue reading it again. You miss out on a lot of information, you miss out on a lot of plot. And that's not how you want to approach trading as well, right? Going from the daily, I go into the 4-hour. That's essentially the same thing as going from page 1 to page 2, right? All right, so getting into the trade here for Tuesday. Like I said, my entry pattern is going to be this 10-hour fair value gap. So notice how this fair value gap here could be rebalanced and retraced into, right? It should be rebalanced and then respected to continue higher. And so let's see exactly what we did. So there's that fair value gap here. We trade into that fair value gap. Let me show you guys. So we trade into the fair value gap coming into the Asian session. We rebalance the inefficiency and then we expand towards previous day high. Previous day high. I'm going to draw your attention to it once more. Is oh yeah, bye ma. Previous day high is wait má thì má muốn con làm cái video cho má ngày hôm nay hả?
Nhưng mà tối làm hay gì?
Ok, thì con làm một tối được.
Tối đi tí nữa tối ba về đi rồi gọi rồi ba chiều ba về rồi.
Okay. And so we came into, we rebalanced that inefficiency here on that during London, and then we expanded higher, and then we took out previous day high. And here, if you guys watch the very first 15 minutes of my live stream, you guys could see me actually live in this trade, where after we took out previous day high, I moved my stop loss, to break even, and then I'm letting the trade run, right? I don't care if I get stopped out at break even or if we're going to continue higher towards that premium. Once we take out my model's objective, I'm moving my stops to break even, and I'm just letting prices do its thing. And so we expand towards the premium of that dealing range here on I think this is during the New York PM session. But yeah, we continue to expand higher. We took out previous day high, and like I said, that expansion higher, that magnet, it's still pulling us towards the premium of the dealing range. And yeah, that basically concludes my trade, right? It's very, very simple breakdown. There's not really much that I want to go into it. But yeah, so some of the key things that I do want to mention. So like I said, during this trade, I had a high time frame objective, I had a model, and I had an entry pattern. Every single one of my trades that I take will have these three components. This just helps me maintain that level of consistency, and it really, narrows the amount of trades that I do take. But the trades that I do take, they're high quality, right? Time frame alignment. Like I said, you want to go from page 1 to page 2, page 3, page 4. You don't want to skip a page and lose out on information. Third, standard deviations. So, there's standard deviations is essentially a projected price range that allows you to have extra targets in mind, right? So here, we have this kind of like this retracement leg, right? Where we retraced back into the 10-hour fair value gap to expand higher. And this retracement leg here, you could actually use that retracement leg for projections. And so, here from this kind of swing low here to this swing high, I have some standard deviations, right? And so notice how this is previous day high on Monday, right? Notice how previous day high, my model's objective, aligns basically perfectly with the negative 0.5 standard deviation. This gives me, a lot of confluence and a lot of confidence that we're going to take out previous day high. And then, -1, -1.5 could be used as standard deviations. -1.5 aligns perfectly here as well with the premium of the dealing range, as you guys can. Oh, give me 1 second. Alright, so sorry about that. But yeah, you can use standard deviations here if it allows to use to have extra projections, right? Extra targets. This is like a case by case scenario. Sometimes you're not gonna have the ideal, standard deviation projection, but it just so happens that the trade that I took had basically perfect standard deviations and everything aligned with existing liquidity, right? Previous day high, it was matched up with the negative 0.5 standard deviation, and this buy side level here, it very a lot of alignments. So standard deviations, just using that for extra targets. Fourth, and this is one of probably the biggest confluence that I could mention for this trade, right? I mean, I guess it's the biggest confluence other than the 3 components that I look for in a trade. So in this trade here, there was actually a lack of SMT. And you're probably wondering, what are you talking about? So I know about SMT, but I've never heard of, a lack of SMT. So if you guys take a look here on ES, we have this swing high here on ES, right? And on this swing high, we have that same relative swing high here on NQ. And notice during the time of this trade, both the indices have yet to take out that specific swing high. So notice where ES is at the time. We failed to have an SMT divergence, right? We don't have SMT divergence, and this could mean that there's going to be that there could be a possible continuation in that specific direction, right? So if you guys refer back to what SMT indicates, it essentially shows you where there has been manipulation in the markets, right? It's not, I guess you could say it's an indicator, but it's more of a price action indicator, right? It's not like an EMA, it's not like a VWAP or whatever. It's actually it's in the charts. It's present. You don't need trading views indicator here. It's visually in the charts, right? And so whenever there is SMT, the swing high tends to be a strong swing high, right? Meaning that it's not going to be broken past. And so if there was SMT here, let's just say that this swing high, this high right here, took out this high. And so if we took out this high and, you know, ES failed to take it, then it's going to give me more of a, you know, ES, we didn't take out the swing high, but in this like scenario here on NQ, we did. You know, it's just it's just not as probable anymore. But coming into this trade, I noticed how there was a lack of SMT. So inverse this concept. There was a lack of SMT, and because there's a lack of SMT between the markets, this allows for me to anticipate a continuation in that specific direction. And yeah, so that's one of the key components here. It's a daily model, so I'm allowing this trade to run for 1 day. So notice how I'm basing this trade here that I took on Tuesday. Notice how I'm allowing, or I did allow this trade to run for a whole day, right? Once we complete the objective, that's obviously when I close the trades. But if we didn't, I would have allowed this trade a entire trading day to complete the objective, because I'm taking it based off of the daily model. But let's just say if it was a 15-minute model, then I would have only allowed it 15 minutes to run. If it was a hourly model, I would allow it 1 hour to kind of play out, right? So it's a case by case, but just know that the amount of time that you should spend in a trade is based off of the model, or I guess for my strategy at least. And sixth, notice how the 5-week order flow is bearish, but I was able to trade that, but I was able to take a trade that was bullish. So this requires me to show you guys what's happening here on the 5-week time frame. So the 5-week time frame here, this is the 5-week candle that was previously created. And so the way that this 5-week candle closed, the easiest assumption that I could make is that we're going to probably, notice the way that I use my words there, probably anticipated, right? It's not clear, it's not, you know, we're going to take out the 5-week low. It's just higher probability, right? But with the way that we close here on this 5-week time frame, my easiest assumption that I could come up with is that we're going to take out the 5-week low. So here I'm actually bullish for the next 5 weeks. Or did I say bullish or bear? Or I'm bearish for the next 5 weeks. But notice how I was able to take a, you know, I guess you could say a bullish setup. And so if you guys go onto the weekly time frame and the daily time frame, you guys will notice how the weekly time frame here, this is the previous weekly candle, it's not bearish, right? It's kind of neutral, so I can't really rely on the weekly time frame. But the trade that I took was based off of this candle right here, and it's a bullish candle, right? So I understand that the 5-week time frame is bearish, but the daily time frame is telling me that, hey, we don't be too focused on the macro perspective. The daily time frame is essentially telling me, hey, currently right now in prices is telling me that it wants to take out previous day high. It's not suggesting lower prices, it's suggesting higher prices for that specific time frame, right? And I guess it's a harder concept to explain, and I don't really want to spend too much time on it for a video for just a trade recap. But yeah, and so that essentially wraps up my trade from yesterday. I was able to grab, let's see, so 100 points. So I was able to essentially grab 170 points from where I entered into where I exited, which is the premium of the dealing range. And yeah, that's going to wrap it up for me for today's video. Thank you guys so much for tuning in, and until next time, be safe. Alright, well, hopefully, I just ended the YouTube video, or I guess that recording. Hopefully you guys were able to kind of see how I view prices, my perspective on what prices, wants to do. And yeah, so here I'll actually go into the trading. I'll go into some of the pros and cons here with you guys, just so I could, stay consistent with what I want to do. So, what I should continue doing or what should I continue to practice going into this week? Practice taking consistent trades, right? The way that I'm going to do that is being able to identify and explain what my higher time frame objective, what my model, and what my entry pattern is for every single trade that I take. So like the trade that I just went over with you guys, I had a higher time frame objective, I had a model, and I had an entry pattern. Everything there was present, right? All of 3 components were present. All I had to do was press the button. And this is something that I have to, practice on and on and on and on. Practice that consistency. And so that essentially is, one of the key points and, one of those key values that I have when it comes to trading. So taking consistent trades. Second, paying close attention to SMT and when there's a lack of SMT. This allows for, an understanding of if there's going to be a continuation, if there's been manipulation, and it just prevents unnecessary losses. Third, being patient, allowing the markets to come to you. There will be a point in time, or there will be a span of time where you're not, you're actively trading, but you're not actually taking any trades because your strategy isn't present in the markets, in the current markets, right? I think I've gone like 3 weeks without taking a single trade, right? I think yesterday was my first trade that I've taken in over like 4 weeks or so. I'm not completely sure on that. Don't hold me accountable, but just know that there might be times where your strategy isn't present, and those are the most crucial times, right? It's not about how much money that you could take or from the markets. It's about how much money that you can, how many losers can you prevent, right? And yeah, just some things that I could continue to work on. Just some things that I could continue to work on coming into this week is practicing and really aligning my thoughts and my actions with the goals and the values that I have for myself. It's just, this like goes completely past trading, right? This is like a lifestyle where you have that presence of mind and that perspective of just clarity and that understanding that you should continue to align your thoughts and your actions with whatever goals and whatever values that you have for yourself. This is going to allow you to reach a state of true happiness where you're not drawing enjoyment, happiness, excitement, dopamine from the external world. Everything that allows you to feel, I guess, happy should be from within yourself, right? It should be from your thoughts. It should be from your spirit. It should be from your mind. Um, and yeah, second, being confident. Everything that you ever need in this world to succeed is within you. You know, I guess you can say that we're in this golden age of social media where, you know, essentially you're expressed and you're shown a lot of content, whether that's bad or good content, right? And I know how I'm able to relate with this kind of idea here is whenever I first started trading, right? I searched up how to trade on YouTube. It's just endless amounts of strategies and, you know, whatnot on the internet. Every single one of those videos had a fire wallpaper in the background, a fire backdrop, and click on this video to 10x your portfolio or whatever, right? And you know, you're always chasing that next best thing. Even though you have one present, you're going to continue chasing another, hoping for, you know, quick returns. This isn't how you want to approach things, right? Just sharpen the skills that you have within you, right? And be confident in your skills. The phrase that it's a simple 3-word phrase. You are infinite. But it means a lot to me. I'm a big fan of Vagabond, if you guys have ever heard about it. Basically, manga that encapsulates the growth and the journey that one goes through to become a better person. And one of the main lines that the main character has is, inside I am infinite. It is just something that resonates with me, right? Everything is drawn from internal, not external. And so remind yourself that. So some improvements here for this week. Consistent trades requiring a higher time frame objective, a model, and a entry pattern. One way that I use to really allow myself to take consistent trades is verbally explaining to, like, I guess no one what my trade is and why I'm even taking this trade, right? It allows me to be more accountable, and it actually requires me to identify objectively what those 3 components are whenever I'm taking a trade. Be patient. Sometimes the markets aren't going to be primed for your strategy. So you have to be patient, disciplined, sit on your hands, and just be an observer, right? You're not forced to ever take a trade. It's all mindset whenever it comes to this whole industry, right? Third, align your thoughts, your actions with your goals and your values. And with that basically wraps up the pros and cons for today's live stream. Thank you guys so much for tuning into today's live stream. And until next time, be safe.